Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, June 10th, 2020, about 5:50 p.m. Actually, I take that back, 5:40 p.m. Central Time. I was just thinking of what I just looked at. So today we had the FOMC. Now let's go right to that, and then we'll come back to the market. I'll let you, if you want to read this, these are the highlights that I'm putting in tonight's newsletter as to what I saw from the Fed. And there is a second page to it as well. So if you wanted to hit pause and read it, you can do it on this tape. I'm going to come back to the market. Basically, the Fed is even looking at controlling yields, yield caps. The Fed is keeping this low interest rate policy going. Negative interest rates, no. They did a dot plot to give you where the market they think it is. They're very concerned if we get another round of COVID, and I'm concerned that in 4 states we are seeing another outbreak. Now, how bad it gets is going to be very important. Keep your eyes on certainly Texas and Arizona. They've been right at the front of growing numbers. They were one of the first states to open with it. Georgia, which was also early, they're not getting that problem. But there are a series of states, and we have to watch it. The next time around, I don't think they're closing the economy. We wouldn't be able to withstand it. They'll have to come up with something different. I've not heard that anybody's further along in a phase 2 or phase 3 test either, so that's important. So what did the stock market do? The stock market's looking at what the Fed said, and the Fed is concerned. Concern's important. So for the moment, and that's how you look at these things, for the moment, there's concern. And then the market will turn and become schizophrenic and say, oh, but the Fed has my back. No matter what, they're going to be there and they're going to do certain things. And that part is very correct. The one thing the Fed cannot do is solve COVID-19. Keep your eye on that. The metal market's up sharply. The reality is they close the metal market price. They don't close it. They settle it. That's the proper word, at 12:30 p.m., but they let them trade to 4 p.m. Central Time. So this never had a chance to see the Fed FOMC announcement, obviously, nor the press conference. So they've jumped up. The dollar's down. You did get over the 114 level in the euro. Market maybe got ahead of itself at that number, but it still looks bullish. I keep looking at the energies, and I'm telling you, I keep seeing the EIA numbers, and I'm looking at what I'm seeing in some of these others. And my concern on these market numbers is pretty simple. Is I'm looking at these still net builds, 8 million, 10 million barrels. Where are the draws? And we're not getting them yet. Now, I'm also reading a lot of reports as to where the oil companies are turning back on their wells. And of course, they're going to go to the easiest and the most proven areas. They're not going to play around this time. They're going to bring on oil. Be ready for that. As for anything else, the bonds and notes, well, they're still rallying, but we'll take a look at the charts. For the week, on midweek now, with tonight, you're down 14 points on the week. Not very much. You've come up dramatically. You haven't had any type of correction that I could call serious in any manner since you made that low. Just look, I mean, on a closing basis, this market hasn't had 1 week of a lower close. You realize that? That's pretty dramatic. When you take a look at the S&P index, you can see where the market is starting to dribble off a little. Maybe that's not the best word, but it's what I think it's doing. You have a pattern still of higher lows, higher highs. That's bullish. The market is still over key moving averages. That part is bullish. You still have the 18-day over the 200. That part is bullish. But what's held the market back is continually this black dashed line called a Bollinger Band. And a Bollinger Band is a fence. Think of it that way, a resistance fence, a support fence down here. And when the market goes to the band, the odds of it staying over it are only 5% of the time. 95% of the time, the market will stay within the bands. So it becomes for traders like, or analyst, maybe that's what I should call myself for you, an analyst like me, that if you're coming into the market on breaks, you're looking for that to be your resistance point. It's done its job for that. In momentum, you have not lost the bullish in embedded reading. It is still here. If we wake up in the morning and it's gone, that would be one thing. But right now, I think on this pullback, until it's gone, the pros are buying this market on this pullback. And I know in the morning when I do my morning subscriber video, which you don't get to see unless you're one of my subscribers, a paid subscriber, I'll be talking about that. I can't wait to do it. I know I got up this morning at 4 o'clock. I know I was ready to record at 4:30, but I didn't want to put it out too early for everybody because I had some ideas. In the NASDAQ, I'm just expecting the market to pull back within the Bollinger Band. That's all. You have your embedded reading. This is called bullish as can be. We know the NASDAQ. We know XLK. We know if you're a spider trader, the QQQ and the ETFs, they're all what? The tech sector's been the strongest sector. And what's been going on in this market is you'll get the techs to go flat, which they did for a little bit right here, and then you got your jump in the S&P, the Dow, and so on. Then you get another rotation. Profit taking hits those, and people move back into the safer sectors. Eventually, you're going to have to look at this market for earnings and so on. Market will eventually wake up to that. I don't know when, and that doesn't mean I'm bearish. It just means there's going to be another force eventually at work. Remember, there's no guidance right now. So without guidance, you're assuming what's going to happen. In the Dow, you're dangerously close to losing the embedded reading. If when we go to sleep, this number slips under 80, be careful. I don't think the pros are going to reach for the Dow. And the reason is I don't like that pattern on this. Now, that doesn't mean they're bearish. It has not closed under the 80, so no. I'm just saying that I don't think they're going to reach for it just yet. The Russell, I think they're bailing out of. When you lose the embedded reading, let's see if you lost it on the close today. Let's get one more day. When you look right here, you lost it. Reading is 78.99. Each day prior to that, you had both numbers over 80. When you reopened just now, you didn't regain it. So my guess is they're stepping away. They're not bearish. I don't see anything yet bearish on the chart, but it can make a run for the 14, 16, 75 level or so, or 70 level actually it would be. And to get there, you'd have to break through this last break low of 1427.30. Simply put, the market has spent a couple of days up and over the 200-day average, what I told you. It's generally, you don't just go through it like it didn't exist. It's a big time average. A lot of people look at it and go, okay, you bought some time going into the FOMC meeting and now you're back under it. Be careful of that one. In the Vix Cash, I don't know if the pros decided to go through the report today or not. They had a lead all day. They're short around 24.66. They're following my theory that the first challenge of the lower Bollinger Band, they're writing puts trying to come out at the closest moving average. That number's up here at 26.89 to 27.06. If they didn't come out and they get that opportunity tomorrow, I still think they will. I think we'll look back and say that that was a trade that they made, or I think they made. I can't prove it, obviously. In the T-bond market, you came down on this break, and I was mentioning it to you before we even got to this point. I said, that's where you should see support, the 100-day average in the lower Bollinger Band. So now you've rallied all the way back to the 18-day average. The Fed seems to me that they're targeting the traders here that think that they're going to be able to drive this part of the yield curve higher, and they're going to just keep the other part lower. The Fed very clearly measured, said they're buying mortgage-backed securities. We'll see. Right now, the chart action is still bearish. We have momentum that has picked back up to what I call the line in the sand. The risk in being short here, if that's what you're doing, is you got to have a stop at 178.27. That's a lot of money. That's over $2,000 a contract. I don't know that anyone's doing anything in that. In the 10-year note, the market again came down, stayed 2 days under the Bollinger Band, 3 maybe right here. Now back to the 18-day average. Are we trending? We haven't been. But we had a downside breakout here. We had a downside breakout in the market here. Until you get up and over these numbers, so far, in my opinion, even with what the Fed said, the marketplace is saying these charts still have bearish bias to them. In the dollar index, making a challenge at the lower Bollinger Band, fully embedded reading, I saw nothing the Fed said to make the dollar strong. Nothing. That doesn't mean I'm right. I just didn't see a thing. They're going to keep throwing money at the market. They're not raising interest rates. The economy is still very, very fragile. They're very concerned about COVID that has returned in now, I think there's 3 or 4 states that are seeing the upticks in it, and it's something to keep your eye on. We'll see what goes on, and remember, we're in June. Come the fall, we don't know what to expect. So I don't see the dollar picking up on that momentum. I can see corrections because it's dropped so much. In the Eurocurrency, as I said, the market today got up, if we take a look, we got to 114.24, very close to the Bollinger Band. I think the market, can consolidate this. It's got the bullish embedded reading. That's powerful. The market still has the higher lows, higher highs. It did what I wanted. It was riding the upper part of the band. I thought it would move to the right. That's what it's done. Can it still go up here towards that upper band, towards the 115? It's pretty rich in price, so you gotta keep your eye on it, is what I'm saying. Japanese yen, okay, a vertical price rise. This is a market that went from 91.03.5. All of a sudden, this market is 93.51. I don't see why, and I'm talking fundamentally. Chart-wise, I see the play. First of all, the market's never trended. You got a higher high and lower low. I still don't see anything happening. What I think's going on is the market tried this breakout from this level. This is the number you don't want to take out, all the way back here. If that's taken out, this was a false breakout. Otherwise, it's a corrective, if you will, rally off a breakout low, and now we'll see if the market starts failing again. Bitcoin, sideways action. It's broader than I normally like for a pipe, but it fits into the definition. It's certainly just playing here. When the market went up today, it got as high as 10,130. The upper Bollinger Band didn't quite hit it, 10,136. Close enough, I think you'd agree, and backing away from it. So you can see it just drifting there. It's staying in the top quadrant of this band as well. In other words, the 18-day average is offering its support. Brent versus WTI crude back into the differential of $2 a barrel. You can see that the Brent, I'm concerned with this. You're losing the embedded reading tonight. There's a point where I think traders learn to take money off the table. I think they're doing it now. I can't prove it, I don't know, and I don't give you trade recommendations here. But when you lose an embedded reading, and you haven't lost it, you lost it intraday. Let me show you. This was the close today. This is just losing it right now intraday for the next trade. I wouldn't be surprised at a minimum if they're lightening up, and that's because this is pretty stiff resistance, the upper Bollinger Band to the 100-day average. If you lose the embedded reading, the odds are you're going to try to make a run for 38.26. If you don't lose it by the end of the day, the upper Bollinger Band at 43.19 stays in play. WTI is acting stronger than Brent. It's not trying to lose that. I still say it's caught between this 100-day average and the upper Bollinger Band, just trading back and forth in there. Rebob gasoline, a market that has been very strong. It's trying to lose its reading. It hasn't lost it yet, and until it's lost it, it hasn't lost it. It is certainly one that I'm not eager about. I think that right here in this upper Bollinger Band range, the market's got a fair value, which is the 125 area. In other words, could have problems there. Last but not least, the nat gas caught between these Bollinger Bands. It's a broad sweep. It has stayed under the 18-day average, which keeps the bias to the downside all the way through. But each time you hit these Bollinger Bands, they manage to bounce away from them, so I'd pay attention. Trend down, oversold, bias down. That's how I'd finish up that one. I want to remind you that we offer an awful lot of information. I love to teach, as you already know, and I've heard some people say, well, he teaches, you can't trade. Well, you don't get my newsletter. Maybe I can't trade, but you don't get it, and if you did, maybe you'd say the same thing. I don't know. But what I do is, in a lot of this, I'll give you ideas on what you can do. That's really what trading's about. I'm not trying to manage your money. I manage no one's money. I have my own money. Whatever I do with my life is mine. Whatever you do is yours. But I do tell traders, buy here, sell there, and they can take it from there with what they want to do. And I teach them along the way, and I explain why I'm doing. So the Pivot Point series, I'll tie it together with my morning subscriber video and my other parts. To get our free offerings, go to www.iraepstein.com. And you'll see on the bottom right, it says free offerings. Go there. If you want to find out more about my research and what I do with my afternoon Spider ETF videos and my morning subscriber, go to the word at the top, research. It explains it all, and you can sign up for it there. I'm Ira. You have a great day, and I will talk to you all tomorrow.